Hello, I'm Simon Wardle and welcome to the Velocity Money Talks webinar series. Velocity is a free program set up to help growing businesses benefit and do exactly that. This is one of a series of 5 programs that we've put together with the high street banks to help you answer everyday questions that are relevant to your business. With over 25 years in finance myself, I hope that we're going to get to grips with many of the issues that we hear you ask every single day. So we're here at Colworth Park in Bedfordshire, a centre of innovation and excellence in its own right. So why don't you come and join me and meet some of my guests. My guest today is David Sully from Lloyds Bank, who is a senior manager for SMEs. So David, firstly, welcome and thank you for talking to me. Now, you've kindly agreed today to talk to us on the topic of financial pitfalls that a business should avoid. It's a vastly wide-ranging topic, but I know you've got 5 key issues that you want to talk to us about. So please, start me off that I know your first key point is running out of cash. What's your point on this?
Yeah, well, thank you very much and thank you for inviting me. Running out of cash is an absolute disaster for any trading company. Having the availability to cash is the lifeblood of any trading company. And if you haven't got access to cash, what do? How do you pay your bills? How do you pay your suppliers? How do you pay the wages for your workforce? So absolutely, you must always maintain ready, available cash to be able to access. Without it, as I say, you will stop trading.
So how are you suggesting that companies should make sure that they're keeping cash within the business?
Well, there's a number of ways to do it. If you prepare a detailed cash flow forecast, and I am aware that another workshop within these seminars are looking at how to prepare a cash flow. But if you prepare a detailed cash flow, you'll be able to recognise where during the year the various pinch points are. And with these pinch points, where it becomes obvious that you're going to be tight on cash, then you can look to rectify that in advance. So there's a number of ways you can do that. If you know in advance, the obvious way would be to approach your bank. The banks will be far more amenable to requests where clients actually are aware that there's going to be a problem, as opposed to having the problem and then going to the bank cap in hand. Whereas if you've identified that you're going to have an issue with cash flow, go to the bank, explain what's happened, and they will be able to see from your cash flow at what point you'll be able to trade out of it. So that would be a good recommendation. Alternatively, you may be able to contact your debtors to see if they would be able to make advance payments to you. Equally, you could approach your creditors to see if they would take delayed payments from you. So there's a couple of things that I would recommend that you have the ability to try to make.
So one of the things that you're really suggesting is that credit control, keeping your debtor days under control, is really vital to keeping the cash within the business.
Yeah, vital to keeping the cash in your business, and also it would make more profitable business for you.
So you mentioned approaching your bank manager if you think you've got pinch points in the business or you can predict that things are going to get a bit difficult. But for so many businesses, they don't actually know their figures. They don't really know where they sit in any one place at any one time. What should a business be doing to keep itself on the ball?
And this is my second key point, which is to know your figures. So I would run monthly management information. So every month, you as the owner of the business are looking at detail as to what has come into the business and obviously what has gone out. Have you made a profit for that month or have you made a loss? And then you can then look to rectify that. What's working well, what's not working well. Underlying within that, you need to know what your profit margins are. So the cost of the goods, what is the true cost of those goods, not just what you're buying it from the wholesaler or your manufacturing. Take into account the overheads, such as import, exportation costs, and the various additional payments that are included within the cost of goods for the sale. Equally, if you're looking to buy into a business, you need to look at the financials of that existing business. If it's a success, fine, you'll be able to see it, and then have you then got the skills and requisite knowledge to continue that success? If the business is failing, you need to know why. And more importantly, will you be able to turn around a non-profit making company into a profit making company? You need to know what your sales targets are. That's key. How much do you need to sell of your certain products or wares or whatever it is that you're dealing with to make your company profitable?
So you mentioned sales targets there. Generally speaking, those sales targets mean that you've got a company where got a team effort going on here. It's all very well keeping sales targets to yourself. What's your view about engaging a whole team within your business?
Absolutely. An engaged team is going to more than likely provide you with a better output. So it's all well and good you as the company owner knowing exactly where you are. You've got your monthly management information, you've got your cash flow forecast, and you know where you are with your sales. However, I would absolutely look to share that with your staff, and it depends on your setup, whether you just want key staff or all your staff to know. But with regards to targets, absolutely use a whiteboard so it's displayed somewhere where all staff can see how have you done last month, what do you still need to do, is there a gap, or in the utopian scenario you're over the peaks and you're flying through.
Is it fair to say then that the more you can demonstrate this sort of knowledge, the more receptive a bank is going to be towards helping you and holding your hand as a business?
Absolutely, and that will be part and parcel of the business plan that you should be writing up in the initial stages of your trading.
Another factor that is vital within the cash flow of business, of course, is bringing business in, but it's just as dangerous to have too much business as it is to have too little, which brings you to another key point that you might like to talk about, and that is overtrading.
Yeah, overtrading is my third key point within financial pitfalls for businesses. Overtrading often happens in recent startup business or businesses that are looking to expand quickly. Now, the actual terminology within overtrading is where a company wins or secures new business, but does it have the wherewithal to fulfill that business profitably, or is it at the detriment of the existing business? So, for example, if a company wins a new contract, obviously the wages will still need to be paid, and that might be weekly or monthly. The costs incurred in actually fulfilling that contract also have to be met. However, when will you be receiving the monies in from that new contract? Is it 30 days? Is it 90 days? Is it longer? So you, as a company, need to bridge that gap. And if you can't bridge that gap, that's where overtrading is kicking in, and you ultimately you'll be spending more money out before you receive any of the receipts in.
So sometimes it's actually prudent to almost hold back and grow at a steady pace rather than just go for absolutely everything that moves in front of you.
Yeah, I mean, it's great to win new business, absolutely. However, you need to do it in a careful, measured way. And again, I would recommend that you go to your bank manager, take in the proposed new contract, work through it with your bank to see if they can support it, but absolutely make sure you know what the benefits, both in a monetary form, are going to be to your company, but also in shaping your business development over a longer term.
Which comes back to knowing your figures, as you said earlier.
Yep.
Yeah.
It's all interlinked.
But of course, you're not going to ever be in a position to trade either at a modest level or indeed at a massive level of overtrading if clients don't know that you exist.
No, and this brings me on to my fourth key point. So you absolutely have to let people know that you are there and you are open for business. Without it, as you say, nobody's going to do any business with you, so you won't be able to trade. There's a number of elements to this is to help you. So I would always say don't stint on advertising and marketing. Again, this will be the flow of your business in, especially if you are a new startup. However, don't go overboard and spend massively. So you need to look, do you need to advertise on a local basis? So is local press going to be sufficient for your needs? Or will you be looking to be more adventurous on a larger scale where you might need to involve radio or a larger, wider press coverage? So you need to set your budgets with regards to advertising. That's key. And you absolutely need to incorporate an advertising budget within your business plan. Otherwise, you're going to reduce your chances of success. But in this modern day, there's obviously greater technology that can be used. So you can use the social media, Twitter and Facebook, to get people on board and following, so they can see what you're doing in the marketplace. What works well for one industry may not always work well for another industry. So if you're able to speak to your competitors or research what your competitors are doing with regards to advertising, then that may work for you. And there's also a number of local forums that you can join. And again, this will be good for you to go along to, so you can actually network with potential clients, so you can see them face to face.
So I'm constantly surprised by how many businesses there are that run a marketing budget. They advertise here, there and everywhere, but they never actually monitor where their business comes from.
Okay, and that's a great statement, and it comes back to one of my earlier key points of knowing your figures. So when you've spent the money on your advertising, you need to monitor how effective the money that you've spent on a certain element of advertising is.
So you're successful, you're making profit, and that then brings to the fact that you've got to pay some tax. How many companies do you deal with who suddenly come to the end of their year, they come to April, whenever their tax year is, and they suddenly don't have their tax bill ready?
Yeah, it's a common failing throughout. It doesn't matter what industry you're in. One of the biggest reasons for failure is where companies, clients haven't put sufficient or any money aside for paying their tax or their VAT. And the problem with that is HM Customs and Excise will vigorously chase every client, every company for any monies that are owed to them. And the upshot of that is that they will petition for insolvency if no monies are received for them.
VAT you mentioned there is quite an interesting one, because of course you only pay your VAT. Most companies only pay their VAT quarterly, but of course you've got that money in your cash flow for the 3 months before you pay your VAT, so it can artificially inflate the amount of cash.
It can do equally where limited companies are having their PAYE taken. Again, they cannot be tempted into utilising that for their own cash flow. So you need to absolutely put in a sound, robust accounting system where VAT monies, tax monies are absolutely set aside, sacrosanct, for payment of these due bills.
And make no bones about it, if you are caught spending HM Revenue's money, they will come for you.
Without a shadow of a doubt.
So David, to conclude the conversation, you're trading well, but you've made maybe a silly mistake somewhere and you find that you have either overtraded or you have indeed used your VAT or your tax money you didn't really mean to. what should you do?
Well, in extreme cases, you can approach the taxman, and they have certain payment plans that they can spread the cost. However, this is always subject to change. I wouldn't recommend that that's the first port of call at all. If your bank can't help you and you are faced with that situation, as a last ditch effort, do make an approach to the taxman to see if there is any way that they can help.
It's a sobering thought. It focuses you on how you should run a business properly. So David, can I thank you on behalf of Velocity for joining us, and an interesting conversation. Thank you very much indeed.
Thank you.
Thank you. So that concludes this particular subject, and remember that this is just one of 5, so be sure to follow us on our other topics. There will now be a live chat open for around 15 minutes if you'd like to contact our panel of experts, or join us on social media or via email using the links shown on the screen below. Our thanks again to Colworth Park for hosting us, and remember that Velocity is here to deliver all manner of business help, from free workshops right the way through to one-to-one advice for all SMEs and social enterprises. Thanks again for watching and engaging with us, and we look forward to talking with you all again very soon. Goodbye.